If you've been thinking about buying a business, but haven't been able to complete it or haven't been able to get all the way to the finish line, today we're going to talk about exactly why. Or if you're just in that process of thinking about, should I buy a business? What does that look like? What are the hurdles I need to understand? Today we're going to talk in depth with my partner, Rob Williams, here about exactly what that looks like, what you need to know, and how you can move past that to buy your first business, right? Or if you own a business, your second business. Now, if you guys don't know us, a lot of people know me as the guy who's worked with thousands of business owners. At last count, we've saved people over $50 million in taxes. We've helped them turn that into wealth. He's been in the acquisition game for what, 30-ish years, Rob? Done about 35 acquisitions that are roll ups. Helped over 100 people acquire their first business. Done $4.5 billion of exits, helping people sell businesses. And like just in the last 2 months, we've done 5 acquisitions with partner companies you've been working with, Rob?
Yeah, 5 acquisitions.
Yep, in the last couple of months. So this guy is constantly and he's constantly working with business owners to figure this stuff out. And today we're going to talk about what does he see on the field playing the game every single day with people so that you can learn from this and take action. So Rob, just really excited to have you here and be able to tap into your wisdom.
It's really nice just to be able to turn up, have a conversation about something that you are really seeing with your customers. I do with mine as well. You know, a lot of people are in that situation where they're thinking about, what do I do next with this business? Is it enough for me to have the lifestyle I want? Am I not already working hard enough without adding more work to me? So there's a huge positioning that business owner needs to take in terms of understanding exactly what the right circumstances and conditions are for making that first acquisition, and also how that links with the direction they want their life to go in. And you've heard me use the formula X plus Y equals Z many, many times. Yeah. And life is a formula. If we continue to have those same inputs, then we're not going to get a different output. And when we feel frustrated, unclear, and not really knowing what it is that we want, we end up in this circle of activity that's not really driving any particular purpose or getting you close to your desired outcome. And I know that doesn't sound like business speak, but when you're talking to business owners about their lives and how they spend their time and how satisfied or dissatisfied they are, it's kind of sits above the business, to be honest with you. And once you can get your head into the game around your business is just the vehicle that takes you to Z,
Mm-hmm.
then you figure out what Z is, and then you realize what shape your vehicle needs to be. And that's where we can start to introduce some real business principles that follow growth pathways or growth principles. And that's really kind of where the conversation starts. I don't know whether you've experienced that with some of your customers as well.
Absolutely. People, they want more, but they don't know what more looks like. They want the next step or the lifestyle. They're stuck where they're at, right? They're running in this rat wheel of like running, 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 not going anywhere. I call it the financial treadmill. And a lot of people are wearing themselves out and not getting anywhere because, to your point, Rob, I think up here, we don't know how to go to that next level. I think a lot of business owners, we've looked out at the world and we see businesses out there and we're like, I can do that. I can start that. And you start doing it and you hire some people and you maybe get a location and you build it up, right? Go to school, you get a degree, you go out, take a bank loan, you start a business, and they know that path. It's pretty linear. It's pretty clear. I start delivering a service or product. I put some people around me to help support that. And we've built a business. And and that is what it is. But then I think there's a ceiling to that, right? And when people can clearly see to a point, that's where they end up. And then once they hit that ceiling, they don't know where to go next. So tell me, Rob, what are you seeing when you work with people who maybe they have a successful business, but they're stuck, right? They can't go to that next thing, or even people who kind of know, I do want to buy some additional businesses or buy some additional locations or expand out from where I'm at. What do you see keeping people from doing that?
I'm fine, Derek. I'm fine. That's what I hear. I'm fine.
Do you think that they're really fine? Or do you think they're just telling you that because it's a defense mechanism? I don't know.
They're fine because they don't think enough about the Z. So they're fine for where they are now. To the outside world, it looks like the business is doing well. But internally, like you said, they're on the treadmill. They're not really moving forward anywhere.
Mhm.
And I think that's the big deal. Every business owner feel like I'm moving towards operational independence. So I've created this asset, this vehicle that is great because I've got a market, I've built products and services I can deliver efficiently and profitably to create enough income for me to be able to say, great, let's get a business administrator or a COO to come in and run this business for me. And then I can go and spend time with my family, fishing, charitable works, whatever it might be. But at least I've got the optionality. And when people have choice and optionality, suddenly we rise up with our levels of clarity about what are we doing next. And that comes with confidence as well. So I think that first thing, which is if I walked away with the business really still stand up, is the question every business owner should answer. And if it would, then suddenly the options really just grow, right? So the first thing is I can live off the proceeds of the business and go and do whatever else I want. The second thing is this is now a vehicle for wealth. And I've done it once. I've actually built an asset that generates wealth for me without my direct involvement. So why would I not want to do that again and again and again? Yeah, I know I can find a market. I can build efficient operations. There's a playbook that I can now adopt to be able to achieve those results. And that's really where mergers and acquisitions and partnerships comes in as part of that pathway. Then I think the third element is, wouldn't it be amazing if I set up a family office or an investment company of my own and work with people or figured out myself, how do I deploy capital multiply to build portfolio companies that just become assets that I buy and sell? And that really is where you get into significant levels of wealth. But it's on the pathway. It's within everybody's reach and capability to be able to achieve those kind of results.
So let's back this up. The first thing I heard you say is to get what we call an operator in place. And I think that's a step a lot of business owners struggle to take. I've had conversations literally this week with people who own successful businesses that are, making them many hundreds of thousands, pushing up on $1 million a year. And the thing they've said is, I could delegate administrative, I can get people to do the work in the business, but the leadership is the part they can't let go of, right? I'm the one who kind of oversees it. When something goes wrong, I come in and put out the fire. So one of the things you said was hire like a CEO type of person to run the business for you. That's the first thing I see that holds a lot of people back, is they're not sure how to make that transition. I think they have the money, but maybe it's a trust thing. Maybe it's a mental thing. They can't let go of it. One thing that I've heard from a couple people is, if my business doesn't need me, what do I do with my time? Yes, I want to go buy something else, but like in between, there's this space. Right? What do? I don't want to just go fishing. So talk to me a little bit about, what does that transition look like of really transitioning away from leadership, bringing in leadership that can work at the high level, right? Because the stuff that's like an SOP, when this happens, you do this. When this happens, you do this. People seem to have that part figured out, but it's that leadership piece that I see as the first step that holds a lot of people up. So maybe tell me what you've seen there, Rob, or what you think about.
Yeah, I mean, why do people tell themselves stories that things won't be successful before they've tried them? When we set our mind on trying to achieve something, getting a greater depth of understanding or knowledge about what good looks like, or how that works, or how other people have done it, is a surefire way to start breaking down the barriers of doubt. And often it's a mindset, whether it's in business or how your relationship is with money or even with people. There's a level of scarcity thinking to, it's probably not going to work out, so why would I try it? So I've seen so many business owners make that leap of faith and create vacuums and voids in their business, and they're amazed at how everything just reassembles itself into a better operating model than there was before, just by giving people the space and opportunity to be able to step in. And you make a really good point. And one of the things that does stop people is their own status and feeling of value. I want to be the person that is seen to be indispensable. What is my identity if this business operates without me? But that's just a story you tell yourself. Wouldn't it be an incredible achievement if this business didn't depend on me and I actually had this asset that I'd invested 10 years in and was creating really strong profitability? And the profitability was so good, I could afford to put somebody in charge in a COO or a CEO role to go and run that business. And, we hear the term MBA so often. But we often hear about, if you've got an MBA, you're going to go into a Fortune 500 business, or you're going to
Sure.
get parachuted into some slick AI startup. But when we actually break down what an MBA is, as a Master of Business Administration, what is business administration? It's understanding the components that make up, how a business grows. It's everything you talked about. Do I understand there's a market there? Do I understand I have a product and service that the market values? Do I understand it's positioned in a way that's more attractive than potential competitors? Am I now thinking about three things? And these three things are operational excellence.
Hmm.
So the fact that the business does run on systems and culture and values and standards.
Hmm.
Or do I think about value acceleration? So this is about growth. So do I understand the principles of how we grow our revenues? And ideally, our profit grows within that same trajectory or even quicker against those revenues. And do I understand the principles of risk management, where I can see where those critical elements of the business structure are in place, and should there be external factors that might impact the ability for them to be able to achieve the result that we've set out for them. So that is business administration as far as I believe. And there are lots of people out there that have those skills that can come in to businesses and run them. And there's some pretty simple frameworks out there that I use to be able to govern that in each of those different areas of business administration, which I do them in a way that they're not, you don't need to feel like you've been to business school to understand them. But what it means is that your business asset is fully aligned to deliver the results that you want. And if the business isn't performing and going in the right direction or as quickly as you need, there are various mitigating processes that we can look at that enable us to be able to pivot, change course, rethink, iterate, in an agile way. And that's really important. And if you've got that in place, then your business can do anything. Because I'm not a startup guy, I invest in startups. The last thing I would think about doing to be able to grow is trying to start a business from scratch. The thought would, well, I was going to say turn me grey, but that's probably a bit late for that, Derek. But, the thought would fill me full of trepidation because there are so many quicker ways to be able to generate profitable businesses. The other point you raise, I think at the low end of revenue, is what I call the seller discretionary earnings trap.
Hmm.
So, whilst I might be making $350,000, $400,000 from my business, that is not transferable. That's my income.
Hmm.
So I'm reliant on the business for my income, and the business is reliant on me.
Yeah.
Whereas if I can take a 400,000 income and still have $250,000 left in available cash to go and hire somebody to be able to go and run the business, then that for me is a different trigger. And if you are in a position where the business is reliant on you and you have available cash, then don't delay. Go out there and think about what that person needs to be able to go and run the business for you, and put a 6-month transition plan in. Say within 6 months, I am no longer needed by the business to be able to generate the profits it does today. If you're in the seller discretionary earnings trap, then I would start thinking about what numbers do I need to generate to be able to release myself from this business.
So what I hear you saying is I need to get to the business to the level where there's enough profit that I can now hire a person to start doing what I'm doing and still make what I need for a period of time and give it that window you're talking about.
Yeah.
Um, and that's how we make the transition. The other thing I heard you say was don't believe that nobody can do it like you. There's lots of really smart people out there with the skills to do this. And the only way you're going to know is you're going to have to do it, right? You got to get
Mm-hmm.
on the field and play the game. You can only do so much from the sidelines, and it's easy to armchair quarterback it, as we call it in the States,
Mm-hmm.
and sit in your chair and say, oh, look at where that guy made a mistake or that could go wrong. You need to make a good plan, have that transition plan, bring someone in, and you just need to take the step. And then, of course, you're going to adjust as you go, right? And I know there's lots of steps there, but I think that's the first thing I see holding people back. What other things do you see along the course that you kind of plotted for us there that keeps people from making that acquisition? Let's say they start to hire someone, they get a good person going, they're starting to
Hmm.
let go of some of this. What else keeps them from making that first acquisition?
To your point about what's next for me, if you aren't able to see what is next in your life, that in that formula, X plus Y equals Z, Z is unclear. So I don't really know what my X plus Y is, right? But once I can understand where there might be a new role for me that's even more exciting, then I can relate to the future, and I suddenly my identity doesn't feel threatened because there isn't just this one business that I'm walking away from. I'm putting this business in somebody else's hands to be able to finance and fund the next phase of growth. So I use the private equity example. So when I break it down, in private equity, there are three tiers. Yeah. There's a top tier, which is the money, where you're getting the funding from. Yeah. And in private equity language, they're called LPs or limited partners. Then there's what I call middle layer, and that's the transition for the business owner to potentially move into. And the middle layer is effectively the private equity firm or the GP, the general partner. And their job is to manage the assets that the investments have acquired in line with an investment thesis. Now, how we're looking at this terminology, the middle layer is effectively what they're setting up to generate huge value from buying businesses and running businesses based on their own capital, money that they might be borrowing from banks, and the SBA loan is absolutely a vehicle to be able to do that with, or private investors where they've gone out there with a really exciting plan, a vision, a strategy for their sector that's fully defensible, that gets private investors excited that if they invest $1, then they might see a 10 or a $15 return in the next 5 years, which is better than a lot of conventional investment funds and potentially more exciting as well. So once I can get people to understand that that's the next step on the journey for them, they get very excited about, right, so now my role is going to be setting up that middle layer. Now, what does the middle layer do? Well, the middle layer, first of all, we build the investment thesis. Where is the opportunity? What is the market? What do we feel that we can offer in terms of products and services to be able to meet that? And where do we think our strengths are? What have we done brilliantly in that first organization that we can now translate and transfer into other businesses? Typically, we might look to stay in the same sector or the adjacent sector, and that will be driven through another set of analysis where we look at what we're currently doing. We use what's called the Ansoff matrix. Yeah. And the Ansoff matrix is a 4-box grid where we look at the variables between existing and new and products and markets. So we want market penetration. That's all about continuing to sell the products and services that we are today into the markets that we're operating in today. Yeah. And what I say is, for your growth, you really want to drive your vehicle as far and fast as you can before it runs out of petrol. Yeah. And if you're able to acquire businesses in that existing market, existing product box, then that's where you're going to see your quickest acceleration. And if you ask yourself, how much does it cost you in marketing to acquire $1,000 worth of customer revenue? That's quite a neat ratio that you can then use to compare to, well, if I acquired a business that already had $1 million of revenue, say, using other people's money, like the SBA loan facility, and use the profit of the business that I'm acquiring to pay back that loan and achieve synergies in terms of integrating two businesses together and saving more costs and having potential top line synergies for growth, then suddenly you've got a triple threat. And that's where business owners get really excited because they almost see it as a business hack. I've got an investment thesis. I know this market. I'm confident in this place. I know that there are people out there that are looking to sell their businesses. So we have to be able to find the businesses that meet the thesis. We're not blindly buying businesses. We're buying businesses that help us achieve the revenue targets or the profit targets that we want. And on paper, when we look at the comparison between organic growth, so spending money on marketing and sales, to be able to increase customers versus inorganic growth around mergers, acquisitions, joint ventures, and partnerships, on paper, it very, very quickly becomes a no-brainer. And they like the strategy of building out the middle layer of finding financing, finding businesses, negotiating with businesses, making offers, working with lawyers, going through due diligence, and then integrating their businesses into those. And then the final kind of fourth area of value growth comes through valuation multiple arbitrage, where we're bolting multiple businesses on together. And as the quantum of profit grows, then so does the valuation multiple. So they might be buying three businesses of $1 million EBITDA each at a 3 multiple, but when those 5 businesses come together, suddenly they're worth 6 multiple,
Right.
just by increasing the profit using exactly that approach. Now, sometimes you hear people talking about roll-ups and valuation multiple arbitrage as if it is just a given. But another layer of complexity that really excites people to move from I'm not ready to this is an amazing new opportunity for me is the concept of a platform company. And a platform company is really where you do get the higher multiples. And that's where there is real synergy. There is integrated systems and processes, integrated culture. So you effectively have this operational layer that these businesses then just plug into with a lot of shared resources and shared services that they can all bolt into, which is very, very efficient. That's exactly the kind of plug and play group business that large corporates, private equity firms will see accelerated value in. And it's massively defensible. Once you can build that, you'll never feel that you're selling a business at a price that you are being given by the market rather than dictating to the market exactly what the value of your business is worth.
Okay, so there's a lot there. Right. So the first thing I heard you say, Rob, is, most people are operating their business, but we need to start thinking like these private equity guys, right? That middle layer, right? And the middle layer is really smart people who understand business. They go out to the top layer, right? The limited partners and get money. Then they're smart and they know how to take that money and put it to work and buy businesses or invest to make a lot more money for the investors, right? The investors have the money but don't know how to do it. What you're talking about is going from the businesses that get invested in to being the guy who now understands businesses and can invest in others, right? So that's layer number one is you're kind of becoming a private equity guy, or what we call the transition from owner operator to owner investor, right? Once you get that and you're able to free yourself up, then it gets exciting. And the reason I want to put this out there is to what you said. People don't have a vision for what they want. And when you don't know what you want, you have a tendency to stay where you are, right? And so it's like we talked about, if I don't have this business, what do I have? And going back to your equation, X plus Y equals Z. If you don't know what Z is, you're not going to move toward it. If Z is, I need a business that pays the bills and me and my family can take a really nice vacation every year and I can help my kids pay for college and, we have a nice house. If that's your vision, you're already there. There's nowhere to go from here, right? But to your point, once you don't have to run the business, you can see, wait a minute, there is more space for me to go out there into the world and do more. Then all of a sudden this opens up that you can go to that next layer, right? That private equity layer, we'll call it in this moment, or that owner investor layer. And to your point, there's a lot of things you can do with that. There's lots of places to get money, whether it's private people or banks, to go and buy these businesses. So you don't need to be sitting on millions of dollars to make this jump, right? Now you can go out, you can borrow money, buy these things. And obviously you're only going to buy businesses that pay for themselves. And you're going to buy businesses that ideally run themselves. And to your point, Rob, this is the hack. If we have to go out, and the way you said it was much more eloquent, but if I had to go out and build a business that makes $1 million a year, or I can just buy one, building a business that makes $1 million a year might take 5 years of your time if you're good, and millions of your own dollars going into it over time, getting reinvested by the people and facilities and all of that. Or you can just go out and buy it from day one. Just buy right into an extra 500,000 or $1 million business immediately. So that's the hack is you're buying what took someone else 10 years, but you get it from day one, right? Obviously, you've got debt and financing for that. But if the business pays for the debt, Just like rental properties, it's scary for people to think I'm going to go out and buy a $500,000 house and let it sit empty. But if you buy a house and
Hmm.
there's a renter in there that's paying for it, not so scary. Same idea here. If you go and borrow money to buy a business, then it's not so scary if the business pays for itself and then gives some to you, right?
Mm.
Right. So,
Yeah.
and that's of course what you would want to buy. Um, but this is this new mindset. A lot of people are stuck in the my life's fine, everything's good. I don't know where I would go from here. So I like that you laid out like 3 steps down the road where people need to have that ultimate vision. Here's where I want to end up.
Mm.
Here's Z, and the X and the Y are get my business to where it runs itself. That's the X. The Y is now I can think differently and I can set up essentially my new job is to find these businesses, deploy capital to use your words, or put money to
Hmm.
work to buy businesses that run themselves and I can oversee that. But that's the path to the last thing you broke down was valuation arbitrage. A lot of people
Mm.
don't know, Rob, that if I own one dental clinic and it makes $500,000 a year and at a 5 times multiple, that means it would sell for $2.5 million, right? But if I
Hmm.
have 10, I don't just get 10 times that much. If I had 10 of them that made 500,000 a year for that $5 million of income, I wouldn't get 25 million. A multiple might go from 5 to 8. So I might get 40 million or even 10. I might get 50 million instead of just 25, right? And that's
Hmm.
valuation arbitrage is as you get bigger, the business is proportionally worth more,
Hmm.
right? And I think the first time I saw you do that, where you showed how you can go in 3 acquisitions from like a $3 million business to like $100 million business, that you can go back and watch that other video on our channel here. But yeah, that's a lot of steps, but I think there are hiccups along the way in each of those. So I appreciate you breaking that down.
Yeah. No, I think your summary is absolutely right. I guess as a closing kind of statement to the I'm fine kind of sentiment that I see many business owners have, it really does kind of start with thinking about what the exit is. We often feel that there's only one road until we admit to ourselves, well, there's more than one road. Yeah. So, but if that road is going to get you to where you think you need to get to, then you're accepting of it. You don't challenge it. Because as individuals and humans, we don't generally go out of our way to create challenges or confusion or decisions. We want the easy road, but I don't think that's necessarily the truth. When you think about exit planning, we look at a few things. So the triggering event that we talk about in one of our previous videos, again, it's worth checking out around exit strategy, is that moment when you look at your money that you have available for retirement or that you want to leave for your children or invest in other schemes or initiatives that might interest you. What is that amount of money in the future? So again, we're taking ourselves into the future. So if in
Mhm.
2030 I need $30 million to be able to fund my lifestyle from the age of 55 to potentially 90, how much money am I going to need each year? Where does that money come from? Have I been saving into a pension? Have I inherited all of these considerations? But what we find is business owners, 80% of their asset value is typically tied up in their business, which is
Mhm.
great. But immediately we can say, right, this is the starting point. Go and get a valuation. How much is your business worth today? What about all of your other assets? And how far short are you of your Z? And we don't necessarily think about it as a Z, but that's your Z.
Right.
So, but at the moment, your X plus Y isn't going to get you to your Z. And that's the change. So, so that's the first thing. That's the wealth gap, if you like.
Mhm.
Then, when we look at 80% of that, being your business, the valuation gap is, oh, right. Well, for me to be able to afford that, if my business is doing 80% of the lifting, then my business needs to be worth 25 million by that date. And I've just had it valued and it's only worth 8. So
Mhm.
that's the valuation gap. I've got to find a way of being able to get from 8 to 15. And then you've got the profit gap. I think my business is doing really, really well. And if I think about the market multiple that I'm able to put on my profitability to get to the valuation, I could actually focus on increasing the level of profit I've got, which we can benchmark against the market, because that will have an impact in being able to grow our valuation. And that's the profit gap. And that's called the triggering event. when you look at those three numbers, it puts you in a position that says, my X plus Y is not going to be enough to get me my Z. And actually, I didn't realize, but that Z is really important. And unfortunately, the sands of time are tipping away for me to do anything about it. And that drives that urgency. Now, the next thing that happens, well, there are 5 Ds that cause businesses to be sold either with regret, disadvantageous position. And those 5 Ds, again, in a previous video, but just to recap for everybody, are divorce, death, disability, disagreement with business partners, and disruption. And they're all real life events that we can't always legislate for or predict. So if my business needs to be sold, at any point one of those 5 Ds comes in, and I haven't looked at trying to build its valuation or protect it from me being the sole person that's driving value, then I've potentially got a bit of an issue. So it's really important to think about some of those exit principles to solidify the Z and then work out what that X plus Y is that gets you there. Now, when I'm looking to try and make up a 10 million valuation gap, apart from my heart beating that little bit faster and a little bit harder, I'm thinking, how much money am I going to need to spend to be able to make up that gap in marketing? Huge. It took me 12 years to get to this position, and I don't want to do this for another 12 years to do it. So how do I shortcut that process? And acquisitions is the answer to the problem. So it's not waking up one day because you've seen something on social media about, you need to do acquisitions, or the baby boomer thing that you hear a lot of people talk about. What is the strategy that I need to employ to be able to get my business to a valuation that is my Z? And that's the reframe. And that's why it's important that people do it. Now, there are 4 categories of business owners. The first category of business owner is the sleeper. Yeah, and I want to shout, wake up, wake up. 5 Ds, triggering event. But they don't always hear. But they're happy. They are fine. They just keep on going through the motions. They might every now and then take a little bit of a dip and have to use debt for operational financing or whatever it is. But it's okay. The business pays for my lifestyle today. I don't need to think about the future. They're the sleepers. The second category are what I call the runners, the people that we were talking about earlier. They're aware of this, but they think, if I work harder, I'll make more profit and increase the value of my business. But at this point, it's impacting their family. Their employees see them as being stressed out. They're not necessarily making the right decisions. They're not really clear on the Z or Z, or they're not balancing X plus Y with the Z. They're just doing stuff quicker, harder, faster, hoping it's going to increase the value of the business. But they're also looking at their shoes. There's no wider awareness of, okay, how would an investor look at this business?
Right.
Yeah. They are that brick in the Jenga tower that if you pull out, it all collapses. Then we get into the grower, and the grower is that individual that is working towards or has achieved operational independence and is looking at accelerated value building activities such as mergers and acquisitions. Yeah. And that's really the transition most business owners that will be watching this video will be on. They're going to go from runner to grower. And then lastly, we have the accelerator. And the accelerator is that person that wants to take 2 steps back and says, okay, I'm no longer the middle layer. I'm employing people to operate in the middle layer. There's my money. Go and buy businesses for me. Go and build portfolios. Go and meet with investment banks and private equity firms and network with CEOs and boards of larger organizations and help me understand what it is that they're looking to acquire in the future. And we'll build them knowing that we've got a massive exit in mind for the future. So that's the whole playbook really around acquisitions.
There's a lot there, Rob. And I think for a lot of people watching this, like laying this out and getting a clearer picture of what this looks like for you, right? There's some honest conversations in there. Am I telling myself this is enough only because I'm afraid or I don't know what could be next, or I'm not certain where I could go from here? There's a lot of that. So it really just depends on where you're at. So I would encourage anybody, if you've got questions about this or you want to talk through this or see what this might look like for you, right? Because you may be in the position where you want to go there, you're just not sure how to get there, just click the link down below and you can set up a call to talk with our team, see if we can help you evaluate where you're at, where you may want to go, and what it might look like to get there. This is the kind of stuff that we work with people on all the time. How do you figure out what Zed is? How do you rebuild it? There's a lot of different paths, to Rob's point. And I think this is a super important thing to figure out, because if you've been wanting to go further, but you keep hitting that ceiling, you keep saying you're going to do the thing and you don't do the thing, there's something holding you back. You need to understand what it is. We've uncovered some different things here. It may be a combination of those things. It may be something different for you. But if you really are committed to making that next step, reach out, click the link down below, join us, and have a conversation with Rob or someone on the team who can help you to break that down and see what's next. Because to Rob's point, we're really passionate about helping people do this. Rob's been doing it his whole life. I've been helping on the other side, helping people take that business wealth and turn it into personal wealth. But we're all working on the same team here. So, Rob, I just appreciate you taking the time today to share this wisdom with people so they can see the big picture and see beyond like what's holding me back. And I think a lot of times if you know what's on the other side of the mountain, it's easier to get over the top.
Absolutely. And it's my pleasure.
All right. Well, thanks. And guys, we'll see you on the next video. But if you want to talk to someone, click the link down below and we'll see you over there.
Thanks, Derek. I appreciate you.